It's 6 o'clock in somewhere in the world. Paris, Berlin, Central Europe. It's 5 o'clock in London. It's midday in New York. It's midnight in Hong Kong, 4 a.m. in Sydney, 9 a.m. in San Francisco, and 10:30 at night in Mumbai. Greetings, good morning, good afternoon, and good evening, depending on where you are in the world today. My name is Patrick L. Young. We are in episode number IPO-VID 168. And greetings and welcome, because we're actually recording this a little bit ahead of time due to frantic schedules. I've got quite a lot of travel on by the time you're actually watching this. I think I'm in Miami at that stage. So I'm delighted our guest could join us in her incredibly hectic schedule to talk about this a little bit before the time. However, we're in Super Bowl Sunday week. It's looming. We've no idea anything about Gridiron whatsoever. We don't even know if Taylor Swift is playing this year. And indeed, we may have got all of our wires entirely crossed about what the whole thing's about. Because for us, the most exciting bit is actually that festival of advertising, which they run a football game around. And indeed, if you're interested in the advertising side of the Super Bowl, check out this weekend's Exchange Invest Weekend Edition. The EI Weekend Edition is absolutely free. You can sign up at exchangeinvest.com, and we're running through a selection of the finest pieces of Super Bowl advertising we could track down. There is every possible emotion therein, and of course a great deal of product placement for fabulous American and other brands, ladies and gentlemen. Now, our guest today is a returning guest. I do believe that she's now three-time guest on IPO-VID. Delighted to see you, Susan. We're talking about the 2025 Outlook Star Events and Markets. I suspect Susan needs no introduction, but I will run through briefly again. She is a leading astrologist specializing in financial markets. More importantly, Susan has herself decades, several decades, if I may say so, of frontline commodity futures market experience. She's a very august journalist. She's worked with exchanges in Chicago when Chicago was not merely the epicenter of the commodity futures trading world, it really was the commodity futures trading world with other little pieces in its orbit. My, how the world has globalized to some degree or another, if one's allowed to say that, during the Trump era. Anyway, it's fabulous to see Susan returning for a third time to discuss her 2025 outlook. Susan, welcome back to IPO-VID. Where in the world are you today?
Well, hello again, and thank you for having me. I'm in Chicago, still in Chicago. Been here, like you said, several decades, and got here because I was in the commodity futures business. And if you were going to be in that business, this was the place to be.
And still is the place to be in so many senses. I mean, I'm not trying to deprecate what Chicago has done. It's the rest of the world has grown a lot faster than it was previously, where it was a relative backwater, whereas Chicago has maintained its incredible presence.
Yeah, and all of that started really with the Chicago Board of Trade in 1848. And so, we could go on and on about the history of the Board of Trade and all of that.
It's fascinating. As I probably said ad infinitum before, it's a great year, 1848, year of revolution in Europe. Last year, mainland Europe, and what we would now think of being sort of the European Union nations, actually had a mainland food blight. Was the last thing that happened. So yes, so the Chicago Board of Trade was very, very well timed. But I think the thing that really shocked me was the city of Chicago. I'm going to get this number wrong, and you may not recall either. But as far as I recall, the city of Chicago only received its actual statute of being a city somewhere in the 1830s. And it's quite incredible because we don't think about that. We sort of think, 1848, they formed the Chicago Board of Trade in this already amazing city of Chicago. But actually at that stage, the whole city was only, I think, 12 or 14 years old. I mean, relatively an adolescent.
August 5, 1833.
There you go. Fantastic. Well, of course, you are a woman who knows so many dates because you are used to using these in astrology day to day. I must say, I was thinking about you actually the other week because we had what we thought was an amazing star event on the beach in the Turks and Caicos when we were wandering the dogs just at twilight. And this incredible august patch of shooting stars came past. And I thought that's funny because, cool. Yeah. And I thought, I didn't read anything about that in Red Letter Days, your newsletter today or yesterday. So
really
I thought, wow,
because it's not the planets.
Well, actually, here's the irony. It wasn't shooting stars. It was the end of Starlink, which had just been blown up the other side of the Bahamas by mission control. So we realized it wasn't shooting stars when this spectacular light show gave way to the most amazing sonic boom, which I have to say the dogs did not like one iota. It was quite. So there you go. So sometimes you think you're looking at stars and sometimes you're not. But as you say rightly, you're a lady who concentrates on the planets. And well, I mean, it was an incredible year last year. You had a lot of fantastic calls. It really has been a joy to read your Red Letter Dice newsletter, and it's long may it continue. It's so interesting to see your thought-provoking thoughts, and so often you manage to come up with incredible accuracy about what's going on in the world. Now, you produced this report for this year with an outlook, and it's fascinating to see what you're looking ahead to. And in a moment, we'll actually get on to the slightly longer term perspective, which I find really interesting. But pick out for us, Susan, one or two things that you think are going to be really, really interesting. And let's face it, we're not even at the end of January by the time we record this, and we've already had a spectacularly exciting January in many ways.
I'd say from a market economic point of view, I think the most interesting thing, actually, is the inflation thing, which is for your production team, it would be the inflation one.
There we go. All items consumer price index.
And it's important because what's fascinating is that inflation in the United States, which is what I concentrate on, has a real symbiotic relationship with when the planet Neptune goes through a fire sign. And that happens only once every, 50 years. And Neptune will be entering the sign of Aries on March 31 this year. And it will be there for about 6 months. And then it enters permanently for the next 13, 14 years in January of 26. And so when I first heard about Neptune and fire being in a fire sign being inflationary, I thought, well, that doesn't make any sense. Neptune is like, a watery planet, and how can it be related to fire? Until I started thinking of it as Neptune's a watery planet. And when it's in fire, it creates steam. It's like putting the air into a hot air balloon. And so I started checking out the CPI in the United States, and fascinating. The inflation rate peaked when Neptune was at 9 degrees of a fire sign in both the 1920s and the 1970s. And then it set back, and then there was another high when it got to about 22, 24 degrees of the fire sign. This chart is the 1920s one. And well, I should say, and so for 2025, Neptune moving into fire, I think, is the start of a new inflationary period that will reach double digits again by the end of the decade in just 5 years. And it's related to how Neptune moves through the sign by degrees. And in the 1920s, when Neptune first entered Leo, inflation was like at zero on the left-hand side of the chart. By June of 1930, wheat prices had rallied. There was a big war, and inflation was nearly 24%. Post-war drop, deflationary, but then another rise to another high when Neptune was about 24. Leo, about 5% in 1925. And so now we take a look at the 1970s, which is the inflation 2 chart. And here's where, same deal, I'm tracking the CPI against Neptune in Sagittarius, another fire sign. And the red box is when Neptune is in Sagittarius, and then this is the CPI rate in the United States. So it started at a little high, made a low at about, when it was at 2 degrees of Sagittarius, and 72 at 3%. And in 2 years, it was double digits at 12.2% when it got to 09 of Sagittarius. Setback. And then another high, this time even higher, 14.6% in March 1980 with Neptune at 22 degrees Sagittarius. And so I think this is like no-brainer territory, that we're headed back toward double-digit inflation by the end of the decade. And based simply on the pattern that Neptune has had in the past with the CPI rates in this country, based on when the CPI rates peaked versus the degree that Neptune was in that fire sign. And it will be entering Aries at the end of March this year. And we'll hit 09 Aries in February of March of 2030. And then that secondary, then there will be a setback probably, and then a secondary rise into 34 to 37. But certainly double-digit inflation by 2030, I don't think is on anybody's preferred radar.
No, I don't think it's even on people's risk lists. That's why my natural contrarian is inclined to agree with you simply because nobody's talking about it. Because whatever nobody's talking about, you know well from markets, tends to be the thing that actually has a remarkably strong chance of happening. And that's something, because I think everybody is quite convinced that we're now suddenly in an age of wondrous fiscal management, thanks to the Trump presidency. And of course, there are many, many reasons why that does not have to necessarily be true, even if we do achieve the same degree of economic growth that people are pricing in. So that's fascinating. So does this give us, I mean, it gives us an idea that there's going to be inflation. Does it give us any other color to what's likely to happen? Because I mean, what I mean is, the 1920s was just inflation. The 1970s was that famous period of stagflation, where essentially inflation happened and the economy atrophied. Have we any indication what it might look like?
Well, in both those instances, there was a commodity that underlied the inflation part,
right?
As a raw product that is used in many places, and then it gets reflected into the inflation rate. In the 1920s, it was wheat. In the 1970s, it was crude oil. If you go back one cycle further, in the mid 1860s, it was cotton. And all of those markets have an important planet or angle, an important cusp at or very near 9 degrees of a fire sign. And so I think, and in this round, copper also has has a midheaven at 9 degrees of Aries. And so Neptune will be conjuncting that midheaven. So I've got wheat, crude oil, and copper all on the watch list to see which one kind of takes hold. And I'm kind of leaning toward copper because it hasn't done anything before in these situations.
That's fascinating. That's really fascinating. My favorite, just on a copper story, a few years ago, I went and spoke at a conference in Belo Horizonte in Brazil, which is the capital of Minas Gerais province, but actually is the epicenter. It's like the financial center, biggest mining town near where they have all the copper mines. And the soil is incredible. So you cut the soil, it is copper colored. I mean, all of the soil everywhere is copper colored. And that was the most interesting exercise in copper price cycles, because in the main square of the city, you could see every time the copper price had gone through the roof, because they suddenly built the most incredibly stunning building. So you would have these things 10, 20, 30 years apart. And actually in the 60s, 70s, well, the last copper boom, they'd actually got Niemeyer, the famous architect of Brasilia. He'd built an incredible apartment block. But then on the other side, sort of facing it, there was like an Art Deco apartment building, which had obviously represented the 1920s. And it was the most amazing, beautiful expanse. And I was standing there looking at this and talking to my wife. And I said, wow, this is incredible. Now you can see the cycle of copper. And it's like, what are you talking about? But it's the most obvious I've ever seen in a city. But that's fascinating that copper could be the thing, because I'm trying to work out what it is about copper that makes it the catalyst.
Well, I think in this situation, it could be related to batteries.
Great. Yeah.
Copper is an important ingredient in creating batteries, which we need if we're moving toward more electric vehicles and more battery operated infrastructure and that sort of thing. So that's just my, non-economist viewpoint on it.
No, that's a great idea, actually. I can see that entirely valid. Well, that's an incredible call, because certainly I think most people are thinking that inflation is a genie that the Fed has got back inside the bottle. And this would certainly suggest whatever. And I mean, by the way, we're not pre-blaming the Fed. I mean, there may be extraneous circumstances to whatever causes it. We can't say that. But certainly that's going to shade a lot of what's going to happen in the rest of the market. So that's a stunning prediction.
Well, and not only that, but if you're looking at markets to watch and markets that are potentially bullish, know that in these previous times, wheat in the 1920s, crude oil in the 1970s, the price of both of those commodities tripled or quadrupled during that period. So think about the price of any of them tripling or quadrupling in the next 5 years.
That's quite incredible. And certainly one can see how, well, a tripling or a quadrupling of the wheat price is really difficult for a lot of people. I mean, that's a fundamental human necessity.
Yeah. And then it leads you down the path and rabbit hole of, okay, what could happen really in the world to make that happen? I don't know.
Yeah, well, that's fine. That's not we're not asking you to have the holistic answer to everything, but certainly if you can put that on people's risk radar, it's a fabulous asset.
Yeah, and just from all points of view, to just be prepared, to not think that this is going to go away and is solved. I think that however you live your life, to be prepared that there could be substantially more inflation than you are used to living with.
That's absolutely fascinating.
And I think particularly hard for people who, unlike us, have not lived through one of those periods before.
Well, I think that's a very, very good point, because certainly we saw a hint of that in the course of the last, say, 5 or 6 years, where suddenly people saw interest rates in the USA go above 4%, and they thought that was high. Yeah, that was giddy and high. And I mean, you or I, we sat here, and I mean, and I'm not talking about sort of South America or other places that have had telephone numbers, but we've seen the US, we've seen US interest rates into double figures. We've seen the UK's interest rates getting up towards 20% during the course of our careers. And that was still with the UK being a G7 nation. So that is a very, very interesting point, because it isn't something that a lot of the world is wired for, is significant inflation.
Exactly. And the people who are in mid-career doing trading, doing activities in the markets, have no conception of that it's possible.
Yes.
And how to trade it.
No, and how to trade it, and how to look, I mean, not just in the copper market terms or the other major commodities, but as you say, starting to look at the yield curve and what that can potentially look like, and how it can tie itself in knots over particular days, weeks, and months, depending on the fear of the market, the belief in what's coming next, et cetera, is something that is very, very difficult to replicate unless you've been in those sorts of crazy times.
And 50 years is long enough that the people who were trading it in the late 70s, early 80s are likely retired and not there anymore. So it's a brand new learning experience.
Absolutely. Well, even the people, you think about it this way, even the people who were in the market in the mid to late 80s, when UK rates hit their sort of secondary peak through into early 1990s, which was the same in continental Europe. Most of those people are actually retired, or certainly if they're not retired, they're now in management rather than necessarily being full-time front-on traders. So that is very interesting.
But it leads, your comment about the Fed leads into a nice segue into another thing that I think is really interesting from a big term perspective. And there you have it, the chart about the Fed. This is I think the Fed is under incredible pressure this year and into 26 based on its horoscope chart from when it was created on December 23, 1913. 6:02 p.m. in Washington, D.C. is when Woodrow Wilson signed it into being. And what makes it interesting is at that time, you'll see circled at the top of that chart, 00 of Aries. That's the midheaven. It is the sun, the degree on that cusp changes every 4 minutes. And so to have 00 degrees on the cusp at 6:02 p.m. Is incredibly significant. The 0 degrees of any of the cardinal signs, which are Aries, Cancer, Libra, and Capricorn, are considered world points. And where things that occur where those degrees are prominent have effect on the entire world. So the Fed has its midheaven, its public stature, its reputation at 0 Aries. And then you go down the arrow to the crosswise one, and you'll see to the right that its sun, its identity, is at 0:1 of Capricorn. So 1 degree off a world point. Opposite that is Pluto, which is its power. And that is at 0 degrees of Cancer. And so the midheaven, the Fed's identity, the Fed's sun, well, its public identity, its public reputation is at the midheaven. The sun is its identity, and its power lies in Pluto. And all of them are at or very near world points. So just the chart alone says that the Fed is a world power, has world significance, and the things that it does have the same. And so what's happening in 2025 that makes this incredibly important is that both Saturn and Neptune will cross the Fed's midheaven. Saturn has been there before, Neptune has not. And both of them will be there at about the same time and go back and forth 3 times each. From, let's see, Neptune is first exact conjunct in April of 25 and last conjunct in February of 26. Saturn is a little tighter, first conjunct in May of 25 and then last in February of 25. And the ones in February are within about a week of each other. And so Neptune conjunct the midheaven says that the Fed has on a public perception stage confusion about its identity and what it's doing. Doesn't quite know what its direction really should be. Saturn crossing the midheaven is about taking on more responsibility, is about leadership, and also reflects the coming home to roost of things that happened 14 years earlier when Saturn was crossing the very bottom of the chart, the 4th house cusp. And that period was right after the Great Recession in 08, 09, when the Fed, when interest rates were practically 0 and the money supply was increasing through quantitative easing. So those actions could come home to roost as Saturn crosses the midheaven in the next year and a half. And I say come home to roost because it seems like this could be not a good thing.
Okay. So when you say, I mean, can you give us some idea of why you think that might not be a good thing and what the not good thing might be?
Well, because it's both Saturn and Neptune crossing the midheaven simultaneously. Neptune is very much about being confused and unorganized and unable to see clearly. And so there's that element of the Fed on the world stage. People really don't know can be confused about what to expect from it anymore.
Mm-hmm.
But then you add the squares to Pluto and the sun, those same two planets, Saturn and Neptune, squaring the sun and Pluto. And they have similar messages. Neptune squaring the sun, same deal. Confusion about, okay, what is the identity of the Fed? What do we stand for? It can speak to having defeats or wanting to avoid risk in some way, to shy away from risk. But Saturn squaring the sun says that it is difficult to maintain its freedom, and that authorities are not receptive to your plans. And so that certainly seems to be the case under the new administration, that the Fed could come under pressure to be not as independent as it traditionally has been. Now, same deal. Those two same planets, Saturn, Neptune, squaring Pluto. Its power base. Neptune squaring Pluto is about trying to gain more control and maybe being more secretive. And Saturn squaring Pluto is about being frustrated about the ambition that the Fed has and being financially stymied. And this particular chart I picked was for June 10 of 2025, which is when Jupiter hits Pluto. And Mercury is also close by. And Jupiter only will touch Pluto once every 12 years. And Jupiter, Neptune together hitting Pluto in mid-June of 2025 says that there's a lot of chatter, a lot of talk about the Fed's power, about how it stands in the world, about jawboning, whatever. So I think the Fed's under pressure generally through all of 25 and into Q1 of 26, and in particular in mid-June when Jupiter and Mercury are hitting that T-square as well. So I think it'll be a difficult year for the Fed.
Yes, I mean, hashtag it's complicated, but it's quite fascinating because you can already see some elements on the ground, as you say, the groundswell of Trumpian opinion, which was that the banking industry needs a makeover, needs a lot of deregulation, there needs to be a lot of things happen which go on. I'm sure probably there are some people who are the crypto bros who are probably looking at this and going, well, that's it. They're going to blow the Fed up in some way, shape, or form, close it all down, and Bitcoin will be the currency of America by 2027, which I personally think is a little extreme. But I can see there are a lot of people who are already imputing their scenarios on top of that, which would look really, really interesting.
Mm-hmm. Well, and I didn't include it in this set of charts, but in the annual outlook report I did, there was a chart or two about the U.S. 10-year T-note having a Saturn return this year. And in the past, those have brought changes to the U.S. currency. And so that was, who knows, the crypto bros might be right.
Who knows? We might get there. You never know. And we're discussing, ladies and gentlemen, with Susan Gidel today, this fabulous 2025 outlook that she has produced. And it's I got to say, I think it's a snip. I mean, what is it, $60, something like that?
Yeah.
It costs, yeah, $60. You can download it. The link is here somewhere in the show notes, or it's going to be caressing across the screen in just a few moments. Once again, it's a great read. It really, really is very, very thought-provoking, well worth picking up to have a perusal of, because there are many interesting charts. We're just cherry picking one or two that are quite fascinating at the moment. And obviously, I mean, well, we're just about halfway through the show at the moment. We are recording today, ladies and gentlemen, unfortunately due to my travels and Susan's incredibly busy appointment schedule, which is quite justified given the fabulous analysis she's been producing via her Red Letter Day newsletter recently. So let's talk, ladies and gentlemen, just for a moment, give Susan a slight rest. I mentioned earlier on Exchange Invest Weekend this weekend is going to have a Super Bowl special. You can catch some of our favorite advertisements that have ever been in the history, the pantheon of Super Bowl ads during the course of the middle part of that particular show, which is increasingly globalized over the interweb and so on. At the same time, don't forget, you can pick up Exchange Invest Monday through Fridays. That's our subscription product, which helps pay for shows like this, and indeed is a wonderful opportunity to understand the business of bourses, the exchange of information, the world's market structures, and what the different bourse groups and market structures are doing. And to give you one example of the sort of things where our predictions aren't too shabby either, well, 7 years ago, we were telling you that the European Union would have to keep its central clearing houses open to the London Clearing House and other clearing houses in the world in order to clear the euro currency. And hey presto, in recent days, it's come through that the European Union intends to add to its temporary regime another 3-year extension based on top of the previous 3-year extension and the 3-year extension before that of allowing these clearing houses to open. That's big money stuff, ladies and gentlemen, and I must say we're very proud to have made that call way out. Let's also talk though now, one of our short videos recently, we've been looking in a series at the world of the top 100 listed companies. And it's quite fascinating to review. We've got a number of videos on our social media. You can catch them here. You can catch them wherever you're watching this, Facebook, LinkedIn, YouTube, also on Instagram and indeed TikTok, because we're not in the USA, so we're never subject to that particular ban, which is currently in abatement. But let's look at this. An interesting few thoughts to start with on the top 100 companies in the world. Meanwhile, in Big World, where do you think the world's top firms come from? The 100 largest public traded companies in the world used to be a remarkably balanced transatlantic affair between Europe and the US. However, with Europe's failure to revive their economy after the 2008 financial crisis, we live in a vastly new world with America dominant in 2025. As things stand, the US has no fewer than 61 of the world's largest listed companies. At the top of the list are the largest firms, Apple, Nvidia and Microsoft, all in the region of $3.5 trillion each. At the bottom of the 100, firms like BlackRock look like relative minnows, but are still simply enormous companies with $150 billion market caps or more. For more in Big World, like or follow. Quite incredible to think about it, actually. The two largest market structure companies in the world, if we put them together at the moment, would be worth about $170 billion. By the way, that's not advice, that's not a suggestion. I do not believe we're going to anticipate seeing a merger between the CME and the Intercontinental Exchange simply because it wouldn't go through because of antitrust. But it is interesting that the titans of our markets, incredible companies altogether, you put both of those together and they would still only just make it into the top 100 companies in the world. That's quite a spectacular concept to come up with. Anyway, great video there. Thank you very much, AJ, in production for putting that together for us. I'm here today with Susan Gidel. She's returning for a third time to our show. We're talking about her really gripping outlook for 2025. And we've already been talking about inflation. We've been talking about also the Federal Reserve. Fascinating issues that you're raising here, which I don't think are necessarily on people's agendas at the moment, Susan. Mm-hmm. What else are you seeing? What other mega trends do you see coming through at the moment that should be fascinating us?
Well, one last footnote to the Fed date in that chart, June 10. June is also very interesting from several different perspectives. Besides this happening with the Fed in mid-June, that's the summer solstice, which is always important to the markets. And it looks like both gold and the S&P 500 will be under real pressure in that same time period, mid-June. And Jupiter, and you can see it in this chart, Jupiter will be squaring both that Saturn and Neptune, and those three planets are related to recession. And so Jupiter making a hard aspect, the square, 90 degrees, suggests that June is a time for potential recession in the United States. So a lot of things happening in June.
Gosh, that's a lot of change happening as well over the course of what's only going to be 5-6 months away. I mean, less than.
Yeah. And so, but to move on from that, let's take a look at real estate while we're still in the interest rate kind of mindset.
We've got a lovely chart for that coming. Here it is.
And this chart, I track the S&P CoreLogic Case-Shiller indexes for real estate. And this is their index level that I think they first started calculating in 1987. I've tracked it against the sign of the North Node, the moon's North Node. And that's a point that astrologers watch for important shifts in energy. And in the past, at least these couple cycles, real estate prices have bottomed when the North Node is in Capricorn or close. And interestingly, when real estate market peaked in 2006, this is when the North Node was in Pisces last. All of these three lines that you see, which represent a 10-city index, a 20-city index, and a national index, all peaked in June of 2006, just before the North Node moved into Pisces. So then it went down in the red line close to when the North Node was in Capricorn, and now it's new highs and has set back a little bit, but we've just entered another period when the North Node is moving into Pisces. And that was in January of 2025, and it will stay there until July of 26. And so certainly I think to be on alert for a potential peak in real estate prices in the real estate market in the next 15 months. There was just news today as we were getting ready to record about how existing home sales were their weakest in 30 years in 2024. And you see that probably as you see a little downturn at the end of that index up near the top. But once again, the potential, I think, for a high in real estate prices this year, early next.
That's very interesting, though, because I don't know. I'm not trying to disagree with you, but what is interesting with that peak, and of course it's logical if we see some of the other things that are coming into the market that you're talking about, it can all correlate. But what fascinates me is it doesn't feel to me as if the US property market overall is necessarily that frothy. I mean, 2007, 2006, 2007, yes. 2005, it really did feel go-go.
Yes, I mean, I agree.
And this time around, okay, certain places like Florida, which has had this amazing impact because huge parts of the northeastern corner of the US have all decided to bail out there during COVID, and a lot have stayed there and so on. Mm-hmm. Those markets I could appreciate. Yes, they could look really rather frothy, and there's a huge amount of supply you can see literally being the naked eye can perceive as you wander around Miami alone. But it's fascinating, this one, because I don't sort of look at it and think, yeah, U.S. home prices look wildly expensive.
Mm-hmm. Well, yeah, I agree with you. It certainly doesn't feel like it did in 05, 06 when I was driving downtown every day, listening to morning radio on my commute and hearing ads for buy homes with no money down. And I'm like, yes. Okay, that can't end well.
No. No, absolutely not. And we'll buy homes with no money down, and we'll give you 8 times your salary, and you're left sort of thinking, yeah, and okay, I wonder if I can get my home, and are there any hills I can head towards with a few cans of beans? Yeah, I mean, that's scary. And
but it's not that.
Yes.
So,
but on the other hand, I mean, I can see a very clear scenario that could do this. Because one of the reasons, I think, if I understand correctly, and I mean, we're not diving into a realm outside astrology, we're just talking about general market knowledge. But I mean, a lot of new home sales last year were very subdued because mortgage rates stayed high. In fact, mortgage rates were actually lower at the start of the year than they were at the end of the year, pretty much in the long term, despite the fact that actually short-term interest rates had gone down during the year. So if suddenly there's a perception that inflation is back, that can very easily, we see, lead the Fed to starting to put interest rates up. And we may actually therefore have a kind of technical recession in housing, because essentially the people who need to buy houses, who need funding, are going to be priced out of the market because they can no longer get 0% down and 8 times their salary.
Right. Exactly. And same deal. I have a chart in the Outlook about the long-term trend in interest rates, which really is not astrological
Yeah.
based, but just technical analysis. I mean, look at a long-term chart of interest rates.
Yes.
We've gone down for 40 years and it broke a downtrend line, a 40-year downtrend line.
Yes.
They're going up.
Yes. Yes. Well, I mean, and it's actually quite interesting, because the scary part is you and I were there when it first broke the uptrend line, and we all thought, I can't possibly imagine interest rates at only 4 or 5% for very prolonged periods of time. And then we sat through nothing or negative something, which was the shock to us. And therefore, again, going back to your point, I mean, the shock that could be here for all the sort of Gen Z millennials who are trying to trade the bank's book to hedge their risk, or trade the, I don't know, the corporate risk for some aviation company or something, could be a very, very exciting ride.
Yeah. Yeah. I mean, I didn't buy a house or a condo when I first moved to Chicago because mortgage rates were 18%.
Right. Right. Yeah, I know. You try telling that to the youth of today, and they just won't believe you. Yes, they think you're like something in Monty Python's Four Yorkshiremen sketch, when they all sort of extreme poverty from their childhood.
Yeah.
But that's the point, and that's true. And I mean, I can remember 15 to 20% interest rates in the UK being quite common for mortgages around the same time. And I didn't buy property either in London because
you couldn't afford it.
It was just unaffordable. It was utterly unaffordable. So that's very, very interesting, because I think, you know, pro rata, it certainly looks as, I mean, there's certain real estate markets, but they're not necessarily in the USA. I mean, in Toronto, I don't know if you ever look at Toronto real estate.
I never have.
Well, Toronto real estate is 2005 on steroids. I mean, it's 2005 kind of meets, it kind of almost comes close to meeting Japan in 1987. I mean, it is insane. People are selling out of incredibly modest dwellings. I mean, not sort of the des reses of around Toronto, and ending up buying vast properties in the Caribbean on the beach with the same amount of money, and quite easily, quite effortlessly doing that. And it's been incredible, because there has been a flood of Canadian money coming out of Canada in recent years, all predominantly people who become cynical about the Trudeau regime, etc. And it is amazing. And that is a super bubble property market. But I appreciate it's a very, very small thing for you to look at compared to the vastness of the USA. Yeah. So this is fascinating. So we've been through, you know, we looked at some incredible inflation issues, some fascinating commodity markets. We've got real estate, which looks amazing. And also, it has to be said, let's face it, real estate having problems goes back very quickly to the point you made a few moments ago about the Fed having problems. Because if you've got thousands or hundreds of thousands of mortgagees in duress, or people who cannot get mortgages or whatever, that's obviously going to cause a problem to the Federal Reserve going forward as well. And particularly under a presidency which is, if one may put it this way, very real estate sensitive. I mean, they acutely understand the real estate market, I think, a lot better than many other presidencies. That's intriguing. So what else? I mean, we've got 15 minutes to go. Give me some. Tell me. The stock market. Let's go.
Okay. So yes, there it is. The Dow Jones chart. So big picture, I'm looking for a pretty substantial low in the stock market between US stock market between April of 25 and January of 26, because Saturn will be sextile Uranus 3 times during that period. And this chart is the Dow Jones Industrial Average since 1988. And it so very neatly lines up with the Saturn-Uranus cycle astrologically, which is about how to make change slowly, how to make change without throwing the baby out with the bathwater. The 3 economic planets to watch always are Jupiter, Saturn, and Uranus. And so Saturn, Uranus come together every 45 years. And the first time they did was within 6 months of when the Dow Jones Industrial Average was first calculated. And so the Dow and the Saturn-Uranus cycle are just a lovely thing to watch together and see how they move, see how the stock market moves based on transits or aspects between these two planets. And I'll go back to the other chart, please. And so the red lines at the top are hard aspects, squares and oppositions, which is when the stock market makes peaks. And the last one was this last square in 22, January of 22, that there was a 22% setback from, and the stock market peaked within about a week of the final Saturn square Uranus. So the purple lines, where we're headed to, I think can be bullish. But to be bullish, you have to get to a low first so it can rally from there. Excuse me.
That's all right. Take a sip of a drink if you want to, actually, because I'm quite intrigued here. So the vertical lines we're looking at, those are a series of different squares that you're going through, or they're sort of cyclical peaks. I'm just checking.
The aspects between Saturn and Uranus.
Okay, great. Thank you. So that's clear. And I mean, the chart itself is very clear. And what a spectacular ride that has been on the Dow Jones over the course of the last couple of decades.
Yeah, and so this is the current cycle we're in. It's only the third one since 1896, so there's not a lot of statistical validity. But compared with the previous two cycles, this pattern has been pretty good. Mm-hmm. And the final 25% of it is always the hardest, and that's what we're in right now. This cycle started in 1988, and to the far left of this chart, the tiny little red line that you see going down is the crash of 87.
Wow. That is incredible. I mean, that is incredible to think that that was the end of the world for all of those of you who weren't there on that particular day. I mean, that was the day the world ended. The news around the world said it was all crazy. And you look at it nowadays, and actually the Dow on average pretty much moves more points in a day these days, because it's on a much higher base than it moved on the day of the crash. I mean, it's certainly a moderately exciting day, and it will move by more points.
Yeah. And also interesting from a long-term perspective is that when you look at each of these three cycles, wherever the Dow was at the beginning of the cycle was the low for the next 45 years.
Wow.
And so there's another one coming in 2032, which is their next conjunction in June of 2032, which, if this holds, could be the low for the next 45 years. But I think that means that obviously there's a pretty severe correction between now and then. I don't think this one is it. This one that I'm looking for this spring to January, because now we can go to the second chart. Because in these previous paths, this is what I've tried to figure out here is, okay, what kind of percentage setbacks are there at this period? And then where does the market go after that? And the setbacks that you see here are the green line. This is based on the Dow record high of 45,073 on December 4, 2024. We are within about 500 points of that as we're recording today. If that gets obliterated by the time this airs or beyond, then you kind of have to rethink things a little bit. But as it stands now, the Dow has a record high in December at 45,000-ish. If you take the percentage decline from the second cycle, which was 29%, it would retrace to about 32,000, which is the green line. A 50% retracement would be at 22.5. And then if the retracement is like it was in cycle one, which is near the Great Depression, down 89%, the Dow would drop to around 5,000.
Wow.
Now, I don't think that, I mean, personally, I don't think that's in the cards.
Right.
But did people in 1929 think that the Dow could drop 89% in 3 years?
No.
Yes, it's not.
No.
So never say never is just what I'm
No, and it's all again about putting these things into your risk manifest so that you're aware of the fact that it could happen. Because let's face it, a Dow at 32,000 is going to feel like the end of the world for an awful lot of people at this juncture. And it is going to have, it would have, I mean, if that happens, it's going to have a huge repercussion on the 401ks and therefore the retirement patterns of not just one generation, actually two generations of Americans. I mean, those who are, in fact, possibly three, those who are already retired, those who are about to retire, and even those who are in midlife are going to see what they think has been sufficient to save is suddenly going to look like they've got to almost start again, or at least top up in order to get there. So that is potentially quite cataclysmic, even if it hits just that sort of 33% or whatever it was, 30% retracement of what's going on. And it's not, I mean, I'm not suggesting it's going to happen, but it's not impossible. Yeah, it's not that big a number. I mean,
it's not.
It's not for those of us who are hardened, experienced professionals who can roll up our sleeves and show the scars from previous crashes. We can
Markets retrace 30% all the time.
Yeah,
it's not a big deal.
And actually, that's the thing that the stock market has fallen out of understanding, because the number of even 10% corrections, let alone 20% corrections over the course of the last 25 years have been almost non-existent, which is absolutely mind-boggling.
Yeah. So, but the upside to that, if we can go back to that second chart with the
second chart of, yep, 1 second, coming right up, the second chart of the stock exchange.
Yeah.
Yes.
What's been interesting in those previous two cycles I looked at with the Dow is that whatever that low was, the next high, you multiplied the low number by 3.8.
Right.
And that was the high. And so if you do that in this situation, if there's a 30% correction in the Dow that takes it to 32,000 times 3.8, you get to 121 by 2030. And I picked 2030 because of the Jupiter-Saturn cycle.
Right.
Jupiter will be opposite both Saturn and Uranus in 2030 to 31. And both those cycles, both those aspects between Jupiter and Saturn and Jupiter and Uranus are typically highs in the stock market.
Wow.
So high in the stock market in 2030, based on their Jupiter-Saturn, Jupiter-Uranus cycles. And so if it's a 30% retracement, we could be 120 in the Dow in 5 years.
In 5 years, which is incredible.
50% retracement, you're still at record highs, 85. And, if it's the Great Depression, well, then we had more serious things to worry about.
Yeah, there are more serious things to worry about. Now, just for the clarity, because I'm sure because we're recording this, some people are likely to ask, where do you get that 3.8 number that your multiplier is coming from?
I just divided in the previous cycles. I looked at what the low was and I looked at what the next high was, and it was times 3.8.
Okay, that's perfectly good. It's just so that everybody's clear on what they're looking at. Yeah, just math. Yeah. That's really, really interesting. Gosh, well, this has been incredibly illuminating, Susan. I mean, first of all, let me say, ladies and gentlemen, you should really be buying this copy of this incredible tome. I do believe we've also got actually our book of the week, which we should mention on the way through here. Is that right? I think we've got The Wisdom of Crowds. Now, there's an appropriate book for this week, isn't it? That's a great read by, if I pronounce it in American, I'll have to pronounce it in Polish as well, as otherwise my in-laws will never speak to me again. So in American, James Serewicki, but in Polish, James Serewiecki, I think would be more appropriate. Now, this is a great book, ladies and gentlemen. One of several books on crowds, which actually we're going to be featuring as book of the week for the course of the next few weeks. Classic book from, gosh, when was that? About 20 years ago, something like that. And a really, really interesting read discussing how individually we may not necessarily be that fantastic at all points in time in terms of prophesying or working out where things are, but crowds have an amazing ability to get things right over time.
Well, and not only that, but there's a lot of market theory about crowd movement and how we move in packs as investors and traders. It's where you get the contrary opinion sensibilities and the classic fear and greed things
Yeah,
that,
yeah, the whole dynamic.
yeah.
Yeah. And in fact, the dynamic, which can be represented very, very well often in technical analysis, but looks completely the opposite to everybody else.
Exactly.
And then gets turned down into wondrous anecdotes about shoeshine boys offering advice to billionaires in 1929, et cetera, and it becomes quite fascinating. Now, ladies and gentlemen, before we round up this show, there are some great things you should be reading. First of all, you should clearly be reading this report. It's absolutely magnificent. It's the 2025 Outlook by Susan, $60. Really, really worth a read. I think if you don't feel it's worth a read after seeing those few highlights during the course of the last 55 minutes, well, I don't know what to say, ladies and gentlemen. It seems quite incredible to me. There's a lot in this, great charts. It's a thoroughly engrossing read. Speaking of engrossing reads, you also, particularly if you're interested in understanding more about the thinking that goes into Susan's unique methodologies, that is her book on financial astrology, Trading in Sync with Commodities, Introducing Astrology to Your Financial Toolbox. Great book to read. That previous book of the week in the Exchange Invest Pantheon, and well worth a read it is too. Susan, I'm going to let you have the last word officially in this conversation. I'm going to ask you the usual question, where do you think the capital market revolution goes next? But I think you may have perhaps an astrologically tinged answer this time around.
I do. And I was concerned about the continued existence of financial markets. But I have to say, I looked at the chart that I use for the New York Stock Exchange, and I see nothing that is debilitating, frightening, worrisome. So I think the capital markets will survive.
Well, on that absolutely superbly optimistic note, and thank you so much for what has been an incredibly thought-provoking 55 minutes. I'm really looking forward to seeing you back on the show, even if only briefly at some stage during the year, so we can talk through how these things are developing. Ladies and gentlemen, get that report by Susan. It's a fantastic read. We will see indeed, Susan. Thank you very much for watching this show today. Thank you very much to our fabulous production team who've been juggling with slides and other pictures today. Thank you very much, Desiree, Herminia, and Marianne. This has been IPO-VID number 168. I wish you all a fantastic Super Bowl weekend, if that's the sort of game that you're into, and may the best team win, ladies and gentlemen. My name is Patrick L. Young. I wish you a great week in life and markets. And indeed, finally, I should say we should look ahead to our guest for next week, because we have another incredible power woman coming up. We're going to be talking about multi-currency mercantilism. Now, there's a thought to garner for the future, and that's going to be with an incredible market structure expert, Kathleen Tyson. Catch us on the 18th of February. We're really looking forward to that show. And in the meantime, I wish you all a great week in life and markets.